Okay, folks, welcome to Best Stock Charts for the coming week. Today, we're going to go over one trade that I reviewed last week that we booked profits on. That was Roku. We'll discuss that trade. Then we're going to talk about the overall performance of last week's Extreme Oversold stocks. And then we are going to talk about the trades that we are looking to put on in the coming week. And a bunch of them are Extreme Oversold stocks. So what you're looking at here is the Watch Stocks page in the members area. Members, this is updated. It's all there. If you want to see the entry price we're looking to get involved with, our target price and our stop price, it is posted in the members area. Go check it out now. Now, tomorrow, I'm going to be sending out the week ahead commentary, which is where I review the health of the overall markets. And then we're going to do a deep dive into the symbols I'm about to review as possible trades for coming week. And that's where we review the historical charts, weekly charts, monthly charts, daily charts, and perhaps even some intraday charts to look for setups. So again, members, so you don't have to wait until tomorrow. The entry price, target price, and stop price are already posted in the members area. So let's kick things off with a review of how we did last week. How was our week? It's a fair question. Was it all moonlight and roses? Did we only book profits and see upside as many of the other so-called stock market gurus on YouTube and the internet always seem to have? No, we had a fairly rough week. We did do well with our short of Roku. I'll talk about that chart in a moment. But our core positions, the gold miners, some silver, which we reopened. It's a small position, but a position nonetheless. They took a hit last week. But I think that the pullback in the gold miners and silver are buying opportunities, and I'll be talking about them with members tomorrow on the week ahead commentary. Our emerging markets plays did really well. We had a good week last week. And as for Roku, here's what I had to say last week about Roku. We'll kick things off with Roku weekly chart. The week of the 11th, we had an outside reversal week. We bounced off of support. Last week, let's just say we closed at support. And we closed well off the highs of the week. Very, very bearish price action. So what we're looking for here is a continuation breakdown on Roku daily chart. Now, on a daily basis, we have a real tell here. We had a major gap on the 13th. We limped back, probably a short covering rally. And now it appears as though we are putting in a lower high. And on Friday, we broke down below and closed below, more importantly, the lower band of support. So it appears as though we are going to proceed lower. Stokes are rolling over. So Roku setting up as a continuation breakdown this coming week. Walgreens boots. Okay, so here's the weekly chart. You can see that we had rallied on the week. We even closed up. We tapped what was prior support, was now acting as resistance. We also put in a new weekly low. Now, on a daily chart, you can see that on the 25th, we rallied, but we were rejected at the upper band of resistance. Then on the 26th, we had an outside reversal day, meaning a bearish engulfing of the prior day's move. That was a short signal for us. So we shorted Roku on a new daily low. It went as low as to 61.12. And then on the 28th, we saw some strength early on in the morning, no new daily low. And I said, you know what, first out, best out. Let's book some profits here and move to the sidelines. And thank goodness that we did. We had a strong day on the 28th. Friday was also an up day. No breakout, though. But we may see one next week. But honestly, I'm looking to re-short Roku. It's not on the watch list, but I'm looking to re-short Roku if we begin to roll over here. Now, if we begin to put in higher highs and we close above this upper band of resistance here in dotted blue, well then no, it's not a short. We would be looking to buy the shares. Also, take a look at RSI, which has broken out, and that's a bullish sign. So this is the reason why it's not on my watch list right now. I am not overly bearish on Roku. We made money here. I'm not interested in revisiting the shares if I don't have a really good risk-reward potential. And right now, I'm just not seeing it. Now, last week on Best Stock Charts, I spoke about 5 extreme oversold stocks. And many times I get some negative comments with regard to extreme oversold stocks. And it's my style. It's a method that I developed over 10 years ago for trading a market, especially a market that is under some pressure because you have limited downside risk and lots of upside potential. But many people look at the charts, like in this case here, go to the daily chart of CENT, Central Pet, and they see nothing but doom and gloom. And that's a fair observation. And they think that I'm catching a falling knife, but nothing could be further from the truth, because what I'm doing here is I'm identifying with members why these shares are unsustainably oversold, meaning in the case of CENT, we have RSI well below 20 at 16.67, and in all probability, it's going lower. So what's the probability that we're going to see a continuation of this selling pressure, especially if we hit historical support levels? In all probability, you will see shorts cover and you'll see buyers step in seeking value. So it's not catching a falling knife. Now, last week, the 5 stocks that I discussed that were extreme oversold stocks, we returned on, if you had bought them as a portfolio, that portfolio would have returned you 5.08% alone last week. Now, that's a pretty good number, right? But what's even a better number is that if you annualize that, that's 264% over the course of a year. Now, I'm not saying that's what we do every year, so please don't get me wrong. But it's a very good method that I have developed over the course of many, many years. And I think that CENT is setting up for a potential long trade. You can see here that it bounced on the 27th. However, on the 29th, Friday, we flashed an outside reversal day. It looks as though we're going to go lower here in the short term. I like the fact that volume has dried up a bit and it is beginning to diminish. Stokes are breaking out. And RSI, again, is at 16.67, simply unsustainable. And that's the word I like to use when I review the extreme oversold stocks. And what I'll do is I'll link at the end of this video to best stock charts from last week so you could see the entire list of charts that I reviewed and what I had to say about them. And you can check the performance last week out on your charting software. All right, we're going to pick up the pace here a little bit. Now, members, we're going to go over CENT in greater detail tomorrow. We'll discuss the historical support levels that we're looking for. And again, the entry point, the stop point, and the target price are posted in the members area under the watch list. The next chart up, Clearwater Paper. Now, we have RSI here at 14.49, very favorable, definitely unsustainable. And you're beginning to see higher lows in RSI, which is bullish. Now, the reason why that's happening is that you're seeing a consolidation here between 19 and 19.50 per share, give or take a couple of pennies. Do I think that this is going to hold? It may, for all I know. However, my guess is that it doesn't, and that we break and we move down here to the 1878 level at a bare minimum. Now, this is a daily chart. Is 1878 the greatest support level in the world? I don't know. What we need to do is take a look at the historical charts, weekly, monthly, and identify whether or not we've been at the 1878 level before, and to see whether or not it's acted as support and resistance, or is it really an insignificant support level, and are there better ones out there? And again, for members on the watch list in the members area, it is posted the entry point that I'm looking to begin accumulation at. And we'll talk about strategy tomorrow on the week ahead commentary. Tomorrow being Sunday. Cooper Group, COOP, not to be confused with Cooper Tire, I guess. All right, so I don't like this chart on a daily basis. I think that we're going to go lower here, despite the fact that we have RSI 14.10. If it rallies, so be it. I won't be a part of it. If we break support, that's great, because this RSI only goes lower, and that's good stuff for us. Now, you can see on this chart here, we have no idea whether his historical support may $9.15 be ideal support? Maybe. But again, what we need to do is pull back, take a look at the weekly and monthly charts, and do some detective work. And it's already posted in the watch list in the members areas if you want to go check it out. The next chart up, Farmer Brothers Company, daily chart, RSI at 15.99, very attractive. We did bounce a bit on Friday. So we did see some buyers step in. Is this support level historical support? We'll discuss it tomorrow on the week ahead commentary. We'll review the daily and weekly charts. Again, not to keep pounding a drum here. Members, you do not need to wait. Check out the price level we're looking to enter at on the watch list. Now, volume rose yesterday. So what I'm going to want to do here is, in all probability, tomorrow on the week ahead commentary, do a deep dive into the intraday chart. See whether or not we had some big volume bars into the close. Stokes are looking very attractive. They're beginning to hook up. So I think that we're very close to the lows on FARM. But if we take out this low here, meaning the lows of last week at 1969, we'll need to reevaluate where we would want to get involved with FARM. All right, now to Chipotle Mexican Grill. I spoke about CMG last week on best stock charts. Again, it's going to be linked to at the end of this video if you want to check it out. Now, I said that CMG would probably head higher. In fact, I predicted that we would probably see all-time highs fairly soon. In fact, I said 2019. Now, at current, we have RSI 89.57. This, folks, is simply unsustainable. Can it still go higher? Absolutely, no doubt about it. But at some point in time, in the very near future, we're going to get a correction here. I'm not saying that CMG is going to crash, but we are going to get a measurable correction, and we're going to look to short CMG at extreme overbought levels and look to swing trade a profit to the downside. Volume was very good on Friday, so the volume bars of late are still very good, while we press to new 52-week highs. MACD histogram continues to rise. That's still very good for bulls and not good for shorts. So members, we'll talk more about CMG tomorrow on the week ahead commentary. And again, there's more data in the members area under watch list right now. I've already updated it. American Semiconductor daily chart. This is a continuation breakdown trade. Back here, the market sent you a signal that you had to get out of this stock. We peaked out at 1644, pulled back to 1357, rallied, put in a lower high. And once we failed to take out the prior high and we began to break down below, minor support here, you should have been thinking about an exit strategy. And then, of course, once we broke down below 1357, it was all done. That's a confirmation breakdown. And the path of least resistance on American superconductor, I think I said semiconductor before, is now to the downside. And we may be contrarians, but we do not want to fight a trend that is not at extreme overbought or extreme oversold levels. And this one here has plenty of room to move to the downside before becoming extreme oversold. Now on Friday, we had a outside reversal day, or a bearish engulfing of Thursday's move. I think that we're at a bare minimum coming down here to 1140, and in all probability, that support level is going to break. Volume was very good on Friday to the downside, but one thing that we can't ignore is that volume to the upside has been very, very good. This is institutional accumulation, so we can't just ignore this. So we need to have a disciplined strategy for entering this trade, and of course, an exit strategy, and I've already laid it out for members on our watch list in the members area. We'll talk more about this trade tomorrow on the week ahead commentary. Note Stokes continue to put in lower highs. RSI, same deal here. So all the stars are in alignment for a continuation move lower on AMSC. The next chart up, Michael's companies, MIK, the symbol. So obviously we have a long-term downtrend with these shares. We saw some strength early on last week, but you could see with these wicks, shadows, topping tails, whatever you want to call them, there were sellers above at the 1225 level. Now on Friday, we flashed an outside reversal day on volume. So there's a good probability that these shares are going to continue lower. So I posted in the members area on the watch list tab the entry point, exit point, stop point. It's there now. Go check it out. We'll talk more about it on the week ahead commentary tomorrow. For those who are long, the Stokes are putting in higher lows and higher highs. So that's a bit concerning from the perspective as a potential short. So we have a set of rules that we will abide by before opening up a short trade here. And members will talk tomorrow about those rules on the week ahead commentary. And that is it for this week, folks. If you're not currently a YouTube subscriber, please follow me there. Leave a comment below. Share with a friend. If you're watching us on the website, enter your email address. We hate spam too. We will send you out all of our commentary, which includes weekday morning swing trading today. That's where I do pre-market analysis of the futures market. Everybody have a great remainder of your weekend. Members, I'll talk to you tomorrow, and everybody have a really profitable trading week next week. Be well.